Hello traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for May 12th, 2019. First and foremost, I want to wish all the moms out there a happy Mother's Day. In the United States, and I'm not sure if it's necessarily observed around the world, but I'll tell you what, here it's Mother's Day, and we appreciate the moms, and we have to show all the moms major appreciation today. Therefore, I have to film this video and get the heck out of Dodge. We've got things to do with my wife and my kid's mom. But before I do that, I wanted to go over what we're looking at the next week for this next week, especially with all the issues surrounding China and the U.S. trade tensions that have heated up going into the end of last week. But before I do that, I just want to say, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. All you have to do is click this little button right here in the middle. You can see a button right here. Sign up today, and once you do that, download the mobile app. So this way you have, while you're trying it out, you can have the mobile app from, you can get it from the App Store or the Google Play Store. And this way you have all of our analysis and everything at your fingertips. So when you're not at your desktop, you can get all the updates. You can be in our chat room. And we have a chat room that's specific to and exclusive to the ForexAnalytix community, and that's where I'm at probably 12 hours a day, and you can find me in there along with the rest of our team. Well, most of our team anyway, and you can see all of us through here, and it's a great place for traders. We've got about 100 traders that are in there throughout the course of the day, so look forward to seeing you guys there. All right, let's talk about obviously last week. So last week, the U.S. has increased tariffs on China, and we are at risk of escalating this trade war. And frankly, from a political standpoint, I think it's actually quite smart of Donald Trump. Now, you can say what you want about the trade war and how he's going about it or whatnot, but I think politically it is more of a political move. Because he can actually go back to his base of supporters and say, who are you going to support? A Democratic candidate that is weaker on China, or how about somebody like me who's tough on China? So I think there's a lot of politics playing into what's happening with China, but it doesn't take away from the fact that things are escalating, and the markets are going to start taking notice, and that is a fact. Like I said, regardless of how you feel about how things are progressing or moving, it is, and like I said, doesn't matter how you feel about it politically. It's the fact of the matter is the markets are going to start taking notice. So, some of the things that we should discuss, I think, first of all, it's really important to me is the dollar yen, and the dollar yen is really hugging a very key support level, and that's 109.50. While we trade above 109.50, you have to be a little careful about being on the short side. However, I do think a break below 109.50, and you can see it here how well we've been supported intraday, and that picture of this chart was taken on Friday afternoon. But it's really important because a break below 109.50 could take us probably down towards the 107.50 level, and that it's kind of like a trap door in the market. You can see the space between 109.50 and 107.50, which should be a longer term triangle support of the dollar yen, which ultimately should break. Volatility has been really low in the FX market, and it's been frustrating not only you but me and everybody else. Volatility is low, but that doesn't mean it's going to stay that way forever. The market tends to pick up in volatility when you least expect it. So, everybody's a little frustrated, but as the frustrations mount, chances are that volatility is going to start to increase soon. So watch the dollar yen. I think it's very vulnerable to moving lower. Now, one of the other things that we don't cover at ForexAnalytix, but it's not something that I don't want to take away the importance of it just because most traders don't trade it. We have to watch the US dollar Chinese yuan or renminbi, or however you want to reference the Chinese currency. China's retaliation efforts may not be of the loud type. It may be more of the silent type. And one of the ways for China to combat higher tariffs and a strenuous relationship with the U.S., especially regarding trade, is to weaken its currency. And remember that the Chinese the yuan or renminbi is a managed. It's not a free floating. It gets adjusted on a daily basis by the PBOC. So we could see a continued weakness in the U.S. dollar CNH, and if that happens, then you should probably take note that things are progressively getting worse. So one of the things and one of the risks that I see here with the U.S. dollar Chinese yuan is, we will attack 7 again on the exchange rate, the big figure. And you can see how we've supported the 38% retracement on this pullback. We have somewhat a pennant formation, flag type of formation, which means, obviously if you start looking at where this thing can go, it could go a lot higher. I'm not necessarily. Whoops. Let me click clone. That's not what I wanted to clone. Clone the wrong thing. Darn it. Let me put. Yes, I said darn it. Dagnab. I could have used a lot of different words, but I'm going to choose not to. Okay. Wait, no, that's not what I want. Okay, well, here, I'll just do it this way. You can kind of see what the direction of the US dollar CNH is if it really wants to break out. Now, and again, let me adjust this. So the fact of the matter is that this is a 38% retracement, and because it's a 38% retracement, there's a good chance of a continuation. And being a pennant, being a little double top here, we could really see the US dollar CNH expand this move higher on a breakout, especially if we take on the 7 big figure exchange rate. And again, I think this is something you're going to see if the market is if the trade war is progressing. You're going to see the US dollar CNH continue higher. So near term, and this is a daily chart, so just keep that in mind. So near term, you're looking at the 618 retracement. Here, you see the 618 retracement right here at 687. That's capping the rally right now. So a move above 687, that should signal to us that things are probably getting worse, and that the US dollar Japanese yen is probably going to be breaking down through this 109.50 towards 107.50. Just from a Fibonacci outlook, this last rally, and by the way, looking at the dollar yen, let me just point out just a couple things while I'm on this chart that I can draw on. All right, this right here, it's a false breakout, right? You guys have heard me say this many times over the years, especially those of you that have listened to my Wise Trade webinars for the last decade to 13 years, 15 years. False breakouts usually lead to breakdowns. So if we had a false breakout to the upside, squeezed a lot of traders out above the 112.20, reversed, that should lead us lower. That doesn't mean we're going to break today, and we could very easily see the dollar yen move up like this towards, like, let's say 110.50 and then move back down. But I would assume that we are going to eventually break 109.50. The only way that's not going to happen, in my view, is that the US and China start being friendly with one another moving forward. But I don't see that being the case, especially in this situation. One of the things that I wanted to also mention regarding the U.S.-China trade negotiations is I've read a couple bank reports over the weekend that really look at this China-U.S. situation is going to be very similar to like Brexit. It's going to be very ongoing. It's going to be it's gonna last a long time. If you think about it from a baseball game point of view, we might be in the third inning of a 9 inning game. We might still be in the early parts of this, and as unfortunate as that could be for everybody involved, meaning the entire world, and especially those of us that are trying to trade the markets and find some direction in the market. I tend to believe that this is going to be a long drawn out process, and from a political standpoint, I wouldn't be surprised if Donald Trump tries to extend this out, through his election campaign moving into 2020, mid 2020. If he tries to make this really drawn out, it wouldn't surprise me, and it would make sense politically. But anyway, those are things that we have to take into consideration. So, what other currencies could really be affected? Well, you think about the Aussie. I look at the Aussie dollar. I think the Aussie dollar is vulnerable. Yeah, we had a bounce on Friday. But frankly, while we stay below like this, 70, 30, 70, 50 level, the risk is lower. And I think the Aussie dollar could trade a lot lower. I mean, if when you start looking at the long-term charts, whoops, I flipped through the wrong one. Here's the weekly chart. I mean, you're looking at 68 cents and possibly a break below. It could take us down to the mid 60s. I mean, we haven't been down there in eons. I mean, if you look at the Aussie longer term, and this is for somebody who's been trading the forex market for quite some time, and I think about how frustrating the FX market, especially trading the Aussie dollar back here in the early 2000s. When we were trading down in the 50-cent range, the average trading range for the Aussie back then on a daily basis was like 30 pips. When we were up here at parity, this currency pair was trading as wildly as the euro dollar at 100 pip trading ranges. But as price compresses, so does the trading ranges, which is frustrating. But what I'm trying to point out here is this is not somewhere that we haven't been. So if we trade back, through 68, through 65, we're looking at prices that could take us back down towards 60 cents and maybe even lower. And it's like I said, it's not places that we haven't been. And if the U.S.-China trade war rages on for the next year and a half, those are levels that I think can be tested again. You look at the Kiwi, and I'm not showing you ForexAnalytix, and the reason why is because I can't get that much this much data on those charts, going back to the early 2000s. But you look at New Zealand. New Zealand is very vulnerable, and we start trading below 64 cents, and we're going to be trading back in the upper 50s, I would suspect. And you look at the Kiwi dollar just near term, and let me take you back over to ForexAnalytix. They'll give you more of a near-term view. We have this little wedge, and we're trying to break through. The 78% retracement is at 65.40. So we get a solid break below 65.40, and that's going to revisit these trend lows below 64 cents. So if you think about the Kiwi dollar, the Aussie dollar, the Canadian dollar is vulnerable too. I know Canada had I think it's the best jobs report, and I can't, if I say it, it's probably not true regarding the statistic, but I read something that it was one of the best, if not biggest jumps on record on Canadian jobs. But what I want to point out here is if you sold the dollar Canadian, and you tried shorting it, below 34 cents on Friday, and it popped back up, and you're like frustratingly wondering why it's so strong. Because if things progressively get worse with China, these commodity currencies like the Canadian dollar, like the Aussie, like the Kiwi, they're gonna get weaker, and the U.S. dollar is going to be the beneficiary here. So before you get too short the dollar Canadian, based on the really good Canadian data that we had, I think you got to be a little careful that it could bounce higher on you. And obviously above 135 on the dollar Canadian will just start squeezing, because no one, everybody will be caught on the short side or long Canadian dollars. They'll have to turn around and get out of those positions. Last but not least, if you look at like the US dollar Mexican peso, this is a currency pair that could really, if things get worse, you take out these highs here, this little downtrend line through here. This is the 200-day moving average in the US dollar Mexican peso. We break through these highs, we're probably heading back to 20 on the exchange rate. And emerging market currencies, commodity currencies, those are the currencies that could really, come under pressure. And alongside with that, you could see yen strength. So, taking everything that I just had said and thinking about like the dollar yen, thinking about the Aussie, the Kiwi, the Canadian, look at some of the cross yen rates, the Aussie yen, New Zealand yen, Canadian yen. Keep a really close eye on those currency pairs, because if they turn south, and that means if they turn lower in price, that's probably suggesting that risk appetite is starting to wane. And one last chart I should really go over really quick while I have you here. Let me go over to the daily chart with this is the S&P. Okay, so with the S&P, we came out of an ascending wedge. You can see this ascending wedge here, right? You can see this. Here's the upper end of the wedge. Here's the lower end of the wedge right here. Okay, so we broke out of the ascending wedge, which is a bearish reversal, right? We have this these highs, this all-time high. We hit a new high, which ended up being a false breakout. So you heard what I said a little bit earlier about the dollar yen. Well, S&P's same situation. False breakout to the upside usually leads to a breakdown. So I think we need to be very careful with the S&P here. Especially if we take out the 200-day moving average, which comes in at right now at 27.75. We take out that 200-day moving average, you're going to have a lot of technicians starting to look at a big double top, false breakout, ascending wedge. They'll start talking about a move back below 2,600, 2,500, maybe even to revisit this longer term uptrend line that you see in blue. Let me reset this chart. That's important to think about. And yes, we do have a big AB equals CD, completion. So, guys and gals, I guess the point I'm trying to make here is be very careful with risk appetite. Be careful. This is a very fluid situation with China and the U.S. I'm pretty happy that I'm going into Sunday as the FX market opens this week with no positions on. But I'm going to be very much looking at the commodity currencies, the emerging market currencies, and the yen. And just remember that we broadcast a free webinar every morning. And for the first 30 minutes, you have Dale Pinkert, Forex Stop Hunter, for those of you that are on Twitter. You have Dale Pinkert, myself, and we cover, these important majors, or at least the big development that's happened overnight. And we do that free every day. So, if you're listening to this webinar right now, just remember, tune in every day, every morning at 7 a.m. Let me make sure it's 7 a.m. It's actually 8 a.m. Eastern. 8 a.m. Eastern every day. And then you got myself, you got Dale, you got then Steven Stelios. And then we usually bring on a guest after that. Sometimes Gregor Horvat or Andre join us to give their harmonic or Elliott wave point of view. But this way you can kind of get an update, because if you're only listening to this week ahead video on Sundays and you're not listening to us, what we have to say throughout the course of the week, there might be you might get a little lost in translation throughout the course of the week. So make sure you tune in, and you just have to follow ForexAnalytix on Twitter, our handle on Twitter. This way you can get the link every single day to that free webinar, and don't miss it. So guys and gals, if you found this video helpful, entertaining. And if you're just happy that I said Happy Mother's Day because you're a mom and you're listening in, make sure you hit a thumbs up on the on YouTube. It always helps all of us out, makes us all feel better about producing this video for you guys each and every week. And make sure you join the ranks of ForexAnalytix and join us in our community. We'd love to have you as part of our community. And guys and gals, have a great trading week. Be careful out there. And moms, Happy Mother's Day. Thank you all for being who you are. Have a great remainder of your weekend. I'll see you tomorrow morning on the Face webinar.